Is up? Good morning, everybody. Happy Thursday. I am the only person in the office right now, but I know you're here, and that's all that matters. I got Joel here. I got Dennis here. So hit that like button. We got a big show today. We got Marc Chaikin. We got Peter Tuchman. We got earnings out the wazoos. So a lot to get to. We're gonna do some more tickers. Yesterday we didn't do that many. Today we're gonna do a lot more tickers. We're gonna go quick. Let's roll that intro and let's go.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Yo, what's up, boys? How we doing?
We're doing well. Kind of a choppy market. I call it dazed and confused for so long I cannot tell. We got a little bit above the close yesterday, not by much. So 70. Should we even talk about Bitcoin anymore? Down $900 at 43,275. Ethereum futures, they're going the same way, down $95. At 63.50.
One thing, and this is again fallacies looking at the futures, not looking at where the cash is. The oil is up substantially here this morning because we sold off after crude closed. The futures closed. So you got to look and you got to track that back. So where do you got the futures? I just want to do a teaching lesson here because the USO, if you just look at that simply, we're trading up 1.37%. So we're up. We moved off of this Russia headline. So definitely paying attention to it. But when the crude closes, the futures close, then you're marked from there. But you can see the significant sell-off in the USO after the futures closed. So now it's retracing a lot of that. So it appears that the crude is it's down a bit, but it's because of the time difference between when the futures close and the cash close on something like the USO. So that came out last night, and USO ripped off it. We closed 63.50. We're trading 64.36. So up 1.3%. From yesterday's close, 4 o'clock close, and that is all off of this Russia headline. So, we often say the 15-minute difference on the futures versus SPY. Well, we can talk about the same thing with the crude close on the futures and the USO.
What time do you think the crude closes?
Isn't it 2 o'clock, Spencer? What time? I don't trade futures.
Okay, that's the cash close. That's
where it's marked from. That's where you're quoting where it's marked from.
Okay. Because it trades.
I don't trade futures. I haven't traded futures in years. So I believe it is if it hasn't changed. I mean, they change these bloody things
all the time. So, it's the same as the SPOOs. It's 5 o'clock. So they trade for another.
But when do they mark it? When do they mark
2 o'clock.
Is it 2?
Which you're correct. Yeah.
Is it 2? Did you just look it up?
No, I know it because I used to try and do.
Because it reopens, but I'm just trying to see when they actually. It is 2 o'clock. They mark it from.
They mark it from, yeah.
We're talking about the mark.
Can you explain that? Explain what that means to mark.
It's saying the close of the day.
Okay.
So, when is the crude close marked? And chat, you can verify that too, because I don't trade futures anymore, but I know when they mark it.
And what we mean by that is that, so let's look at where crude, well, whatever, it closed at 91.83 yesterday, or 91.80. It moves around so fast. So the clearinghouses have to settle their books,
yes.
Right? They have to have, in order for margin, for payouts, you have to have some point where you say, okay, this is the close. So we call it the cash close. The SPOOs, which has been changing forever. It used to be 4:15, but now it's
2:30. This is what the chat
2:30. Okay,
yeah.
2:30.
So I was wrong. I was half hour.
Okay,
I
was
2:30. It changed. I think it was 2 o'clock years ago, Joel.
Yeah.
I'm pretty sure it used to be ours. We're old school, right? So we get those old thoughts in our brains here. So it's 2:30.
Yeah, it's the mark, and like Dennis, full well, the SPOOs. I mean, you see, we closed at 70. Your mark's at 70. But, immediately it was at 64.50 by 5 o'clock. So if you were long at 70 by 5 o'clock, it was marked 5 handles against you. And that's the same with stocks too. I think that's why we emphasize the closing price. When something opens way down, you're like, oh man, I'm down. If I could get out at the market. And also institutional traders,
Yeah.
they get stuck with positions overnight. They're trying to unload something or they're trying to accumulate something. They get stuck at the mark. So that's why we like to talk about the closes so much.
All right.
So
That
okay,
good,
so now we did our futures lesson, even though
Yeah.
none of us are futures traders anymore.
Well, Joel is.
I am.
Joel still trades.
Joel trades them every
I
day.
still trade the real markets.
You trade the SP futures though. You don't trade crude futures.
Too
Every day.
crazy. It's crazy.
Joel, you should. You ever try trading the micros?
In the crude,
No, like in general, like any micro. I mean,
yeah, they're liquid.
Yeah.
Yeah, they're excellent. They're
All right.
excellent. Yeah,
There we
good
go.
liquidity.
Look at that. All right, let's move on here. Let's go to the earnings parade. I want to start with Nvidia. It's probably the biggest report from overnight here. Numbers themselves, frankly, not that bad. Their earnings per share came in above estimates. Their sales came in above estimates. They gave guidance that was basically in line. So it was fine. The numbers are perfectly fine. I don't know. I don't know what to say about this one because on the one hand, it's been like best of breed for so long, and expectations are always high for Nvidia. So maybe like when they just come in normal, like a normal company, then it's just not good enough. That's my interpretation of this morning.
I think it's a little bit of market environment too.
Maybe.
Go ahead, Dennis.
I'm going to say the same thing. I mean, you're right, Spencer. The expectations are always high for Nvidia. It did run up into the report, but the expectation was just high for this company all the time.
I know.
So
it's not their fault.
It was a decent report. It was a fine report. I mean, we've got the market getting hit here today too. Crude is continuing to blast off. Ever since Joel said it's not responding to it, we went up a little bit further again. I mean, we've got the concerns that we were concerned about. Like, let's just take it back to the macro picture here for a second. I mean, this is what's really driving stocks today. Nvidia is sitting there, and it's trading down $5 off its earnings report. And yes, the earnings matter, but what really matters here is we're getting hit on the S&P futures, and exactly what they reported 2 days ago was exactly wrong. And I joked about it for 2 days. I was like, do you honestly think Putin is pulling out? And, I made a joke of it. And I'm like, serious. I'm like, there's no way he's mobilizing all these troops and now backing off. So CNN, I read it last night. I don't know who first reported it, but it's absolutely what was reported 2 days ago is absolutely untrue. He's not even pulling back troops. They're adding more troops. So that's why you're selling off here. I mean, the one good news is that we rallied like 50 S&P handles because they thought that, okay, well, he was backing off a bit. Now we're only selling off 15 when they find out that report was completely wrong. So, I mean, you're holding up actually pretty decent considering all of that. But, I mean, stocks are getting hit today. And it's a hard day for, to think, okay, I'm going to jump in and buy all these earnings stocks that are beating. Walmart's a different breed because it's defensive, but it's risk off day. So Nvidia kind of reporting on the wrong day. Doesn't help.
It's just
going back to the report.
Throw out the high, throw out the low, throw out the 276, throw out the 251, and just look at the upper right chart here, and I can give you. I mean, there's just a line in the sand there. All these highs here. I mean, it's a volatile stock, but I'm looking 2 highs at just under 266, another one at 267. It did sneak up one day to 69.25, but to me, let's just go down to the double bottom since we're trading below it. This stock has to get through 266 today, or the path of least resistance is lower. I'm not looking for 240, but that's just there's a wall there. And until that wall is taken out, we're $6-7 away. We're continuing to leak. I am officially bearish Nvidia until it has 3 closes over 266.
Big level, big resistance. It's a risk-off market still right now. It could turn, and I mean, I'll go with you. You start getting up above 263, maybe it gets interesting again. But it's been a pretty good rally. I mean, 208. What's a 50% retracement this overall move? 346 down to 208. What is that? 140 points. And we rallied, 50. So no, 60. So you're not quite to
near
the
50.
50%
No.
retracement, but you're starting to struggle as you get towards it. So which is, this is an important day for it. It needs to hold on.
Yep, I agree.
And it needs to, not crater, and it needs to get back up and start bumping up against those highs. But it's a loved stock. And if any stock is going to start to pull out and start to rally, it'll probably be a stock like this. So I'm not saying I'm coming in. I've been risk off here for a bit, but there's at a certain point in time you want some exposure to some stocks, and Nvidia would be on my shopping list, maybe even down to 240 if it gives you a real washout. But it's a very important day for it. We'll just say that.
Before we move to the next stock here, I want to maybe stick with the semis here. Maybe we go to AMAT. I know it's not on the topics list, but they also had earnings this morning, and it's the same vein as Nvidia. So they're also trading higher, and their report was pretty good. The EPS beat, the sales beat, or sales was in line. Sorry.
It was up more last night. Again, probably market factors not helping it. This was up to like 148, 149. Report was fine here too. It's problematic right now because the individual reports, they're going to bounce around a little bit. And yeah, you're going to get these, upstarts, and you're going to get these Robloxes that it really matters. But when you get the bigger names, it's this macro picture that matters really more than anything. We got the two concerns, the interest rates in the Ukraine, and neither are going away anytime soon. So it's hard to just come in here and say, yeah, I'm buying stocks. I mean, there's just a lot of unknowns. That's why I want some dry powder. If you're all cash, you probably should be buying some stocks. But I guess it depends on your overall portfolio. But I can't come in here saying, oh, I'm buying Applied Materials on a good report up 3 or 4, because it seems like all of a sudden the macro picture pulls the rug out from under me. And then, all stocks go down. And even though this company had a good report and it's a good company, I get hit on it. So it's a tricky market right now to just come in and just blindly buy stocks on good reports.
It got a little bit above the zone that I would have been targeting as like a sell zone. This pair of tops, I mean, now that we're right there, let's see what happens at 145. Could easily blast through that. You got your 50% retracement there, but I would say what you got to go up to this high here, 147.32. To me, 145, 147, that's a sell zone. That's the 50% retracement. Could take that out. You can start to work into this red bar. But, once, the SPOO's kind of rolling over, getting half back of this move, way off the pre-market high. It just seems like it's just like the market. And I'll just go back what I said and then you said, just like market factors. If there was no Russia, if there was no interest rates, and the SPOOs were up 20, everyone was happy. Yep. It would be a different thing.
We're not in Kansas anymore. We keep saying it. So, and I mean, we've seen good companies report earnings. Some of them continue to go higher. Great news for Upstart that it did not give that back. It came back 130. I was concerned it was going to start to leak it all away, but it didn't, and it held on, and it went up. It gets an upgrade today with an analyst chasing price, of course. It's what they do. But, I mean, that's good news. So there is some silver lining in this market. It's not all bad news. Stocks are holding up fairly well. I mean, even to be down only 20 handles on these Ukraine concerns, like I said, we rallied 50 because we thought he was backing off, and now we find out that's completely untrue, and we don't give it all back. We only give a piece of it back so far. So market holding up okay, but I'm still concerned that there's just a lot of unknowns here.
Also, I think
I'm not going all in.
People were prepared yesterday, with the minutes. Good call by Spencer. Spencer said, wow, we got a big reaction off the minutes last time, and they tried to press it down to the low, and since they couldn't press it down to the low, you take it up to the high. So I think, we got that behind us, at least for now. So like you said, Dennis, different market environments can be more important than the actual earnings reports or
it is right now. The macro picture is more important than some of these individual reports. Now, when you get into the smaller companies, that doesn't apply because they're not driven as much by ETF effects. They're not driven as much by, the overall buying and selling in the indexes. So that's why, a stock like Roblox, its report is everything. It's not going to be impacted by, oh, it's good news, so they're going to buy Roblox back. I mean, that's not impacted by the ETFs. But when you get to the Nvidias, the ones that are heavily in the indexes, they're more impacted by what's happening in the overall market than they are even sometimes on their individual reports. But, you get like a Roblox, that didn't even get a sniff. So we've got separation that continues to happen here. And it seems like every night we get a tech stock down 25% and a tech stock up 25%. It feels like this is every single day. It's like if they smack one, then they buy another one and they try to keep it all in line. And I mean, last night was the same thing. Fastly is the victim last night. It is down 30% here today. And then going the opposite direction, because they got to buy one too, up that much, is DoorDash being up 22% here. So it's a crazy market that there is just separation happening where you got big winners, big losers off these tech earnings reports. It seems like every single night. Yesterday it was Upstart and Roblox. Today the difference is obviously we just said is Fastly and DoorDash.
You know what?
I don't even know what to say on Fastly.
Sorry, wait, you're going to keep it on this because I was going to mention another stock.
No, I was going to move. I was going to table that and come back to it because we got Marc Chaikin here right now. So that's
okay. Okay.
Well, what were you going to do?
I was going to talk. I mean, Shopify.
Oh, that was epic disaster. And we talked about it when it was down 50, and I was like, this is not the kind of market when you're missing numbers. And I guess people are yelling they didn't miss numbers, but the guidance wasn't great. They didn't blow it away. They did not on an adjusted basis. So that's why people are mad their stock's down. They're trying to find reasons, and they go and they're like, well, it didn't miss. Why is the market down? I mean, the expectations are so high.
Growth rate is coming back down to earth. We said that was going to happen a year and a half ago, whatever.
Yes.
Let's bring on Marc Chaikin. Let's see what he thinks about all this. Marc is the founder of Chaikin Analytics. He's the creator of the Chaikin Power Gauge, the Chaikin Money Flow, the Chaikin Oscillator.
Creator of everything.
Everything. Joins us every other week on this show.
The
universe. Marc, good morning.
And the universe.
Good morning. Yeah, the metaverse.
The metaverse. He created the metaverse too. Marc created everything.
Everything.
I want to go
Even though he's not a huge fan of that.
Well, Joel and Dennis said it, but there's a better phrase for it. It's a stock picker's market.
It is.
All the stocks that you've talked about, like Fastly and the companies that have really been torn apart, have bearish power gauge ratings, primarily because they don't have any earnings, or they have PEs that stretch into 3 digits, or they've got price to sales ratios of 60. On the other hand, you've got the Nvidias of the world who reported blowout numbers. They always do, by the way. Everybody knows that they're going to beat estimates and they guided higher. I think I would be a buyer of Nvidia down toward 220, 230, because you're going to see analyst estimate upgrades and price target upgrades based on the numbers that were released. And it's a growth business. Yes, it's expensive, so you don't want to pay up for it. You want to buy it on dips. But I think this is a market where you want to focus on the stocks that are obvious until they no longer work, which is energy and financials, particularly insurance stocks. They're going to benefit from rising rates and don't have to worry about some of the trading risks and loan risks. And energy until it stops working. I really think that whether Ukraine is invaded, the U.S. has set itself up for a supply nightmare. And demand is going to increase. COVID is over. Amazing that Kramer is saying, people weren't prepared for COVID being over. Yes, they were. They predicted the curves would drop as of February into the March State of the Union address. So I think you want to have a balanced portfolio. And I'm not talking about trading, because that trading, you're basically looking at short-term momentum and opportunities. And Dennis is really the king of trading. But I think you're looking at reopening plays like Live Nation, which we've loved for the last 4 months, that is near its high. You want to start looking at hotel chains because travel is going to be there. You don't want to buy airlines because the high cost of jet fuel is a big headwind. And then you want to look at some of the fallen angels like Nvidia, like Trade Desk, which reported an incredible report, has a neutral rating in our model. So does Nvidia. You want to look at Fortinet and cybersecurity, and you want to avoid bottom fishing in these names with no earnings and or high price to sales ratios.
I mean, Marc, you're spot on. We talked about a little bit about this yesterday, but there's been a sneaky reopening trade happening here for weeks now. And you can clearly see the separation. Like you look in the hotels. I mean, you got Hyatt, all-time highs. I know it reported disappointing earnings, but it hit all-time highs yesterday. Hilton, touched an all-time high yesterday. Marriott, touched and made a new all-time high yesterday. You can go, the cruise lines have come back. They're a long ways from all-time highs. They had a lot of dilution in there. But, they've come back too. And, the casinos have come back to a certain extent. I mean, your Live Nation has been a performer here in the last couple of weeks. My concern is a lot of this, is this going to continue? Or is it, this trade was on 3 weeks ago and now we're getting to the tail end of it? That's just my concern. Do you think this trade continues?
I do, because I think these companies are going to be given a pass on the next couple of earnings reports, because everybody's going to say, well, that was then, and now we're looking forward. So,
okay,
as we re-rate the tech stocks, pull down the PE ratios to reflect higher interest rates, where's the money going to go? Well, we know it's going into energy and financials, because they're the two obvious inflation and interest rate plays, but it also is going to go into stocks. I mean, there are mundane stocks like Huntsman Chemical, which we've talked about, Atcor, which makes the wire that goes into new home electrical cabling or setting up for EV charging and so forth. So I really do think it's a stock picker's market. And Fastly should have done what it did. You've got these companies, Shopify, God knows what the PE ratio there is. It's a great company, but it's had a bearish rating in our work because of the valuations primarily and the weak technicals. That's what's working against you in the fallen angels, weak technicals and poor earnings factors. So that's tough to overcome. Again, Nvidia, I absolutely love it. Many of the stocks that you talked about before I got on have rallied up to our long-term trend line on the Chaikin charts, which is a double smooth 200-day exponential average. It's very slow and it really defines the trend. And Nvidia, so many of these names, Fortinet, have rallied right up to that line, which suggests there's some resistance in here. The initial resistance level shifting to the market was 4,600, which was I think a 618 retracement of the decline. We failed there. Now we're probably looking at something like 4520 as our key line, but it feels to me like in some way, shape, or form, we're going to test the 4220 lows. I'm not in the camp that we break them and go down, 13, 14%. It's possible, but I think at this point, it would take a real disaster in the Ukraine to do that. It's not going to do it on interest rates because everything about interest rates is out there. And in fact, I think, and I'm rambling on here, which I don't like to do. I think if you get that first rate hike, the market says, okay, we can live with that. And then we get the rally. So I'm not afraid of the first rate hike. They'd be smart if it wasn't 50% in terms of market psychology. And that's in a nutshell, or a very large nutshell, my thinking here.
All right.
I agree with you, Mark. I mean, people dumping stocks to go in and get 2%. I mean, that just doesn't,
it's
that
hard.
doesn't mean, yeah.
The TINA trade continues to be an issue for me too. And I've said that too. I mean, I had this conversation with somebody the other day, and I was like, they were just asking me what I think of stocks. I'm like, well, there's a lot of uncertainty here, but I'm like, I don't know where else to go though. I'm not going to go into bonds and, get 2% on my money here, and interest rates are 7.5%. So I'm like, do I sell my Apples and my Amazons and my Microsofts, and then where do I go? And then I got a tax bill on top of it all. So I'm like, so I just sit and stand pat. I don't know. So, obviously, maybe it does get ugly, maybe it gets, but I just think the TINA trade does hold us up, to Mark's point.
Well, I think the monopoly tech stocks are a long-term hold, and you start adding to them when it makes sense. But Alphabet is my favorite of the bunch. I just think after years of sort of trailing Amazon in terms of sex appeal, they're doing everything right in AI, and search continues to be a money machine.
Very smart company.
Yeah, they're doing a lot of good things. And, I don't think this is a market, I agree with you, where you dump stocks. I think this is a market where you look for opportunity, recognizing that it's a rolling sort of correction, and we'll get a rolling bull market. But what I want to focus on, the bigger picture, and maybe leave that at that, you've got a presidential cycle that is creating a huge opportunity this year. In the midterm election year, going back to 1918, you get a bottom, and from that low, you rally 40 to 50% into the high the next year. It's a pattern that's never failed. And there's some good political and geopolitical reasons, but the bottom line is you really need to be looking for a buying opportunity, whether it's now or in October, which is a more traditional time for the market to bottom out right before the midterms. This is the biggest buying opportunity of the presidential cycle. So rather than focusing on the negatives, I think you got to look for signs of a bottom and then pick the best of the best to play it. And I don't think you play the conservative stocks in that rally, 40%.
And I mean, some people think the best of the best are all these social media darlings. This is what, and I'm sure you get it too, Mark. It's like all these stocks that are down 60, 70, 80%. A lot of people think these are going to be the leaders coming back, and I don't think so. No. I think a lot of these companies were just ridiculously overvalued, and a lot of these companies aren't coming back, unfortunately, for a lot of bag holders out there. So I like your picks, like getting into the reopening stocks, getting into, some different names. Google. I love Google. It's the biggest position in my long-term portfolio. But you look at a stock like Palantir here today. I mean, this is a storied stock that everyone loved. It's so hard for stocks like this to just rally it back because there's just so much overhead supply from everybody who's stuck in the damn thing.
Plus insiders. Remember, there's all sorts of lockups expiring in any of these companies that happen over time. And the VCs that got in and backed them, Palantir is a classic poster child for that. They want to get liquid. And so there's constant supply, even there's a stock I love that I've mentioned called Doximity, DOCS.
Yes.
They actually make money, a fabulous earnings report. But insiders, this company's been around for, I think, 12 years. It went public a year ago. There's constant insider selling, and either it puts pressure on the stock or it creates a red flag in some models. But this is a company I just want to own long term. 80% of the doctors in America use their software. It's been compared to Facebook and LinkedIn for doctors. And it's where the drug companies go to advertise. Instead of sending detailers out into the field, there are 90,000 detailers in America.
Got that one too, Mark. Yeah, it's a heart attack to watch, though. I just kind of
held up, though.
Put away. Yeah, it is held up. Mark, I want to ask you one question. Just going back to the markets and the diversification and everything. I mean, there's money coming out of the bond market, right? And you have some theories that a lot of the money that's coming out of the bond market, where's it going to go? It's going to go into the equity market. So if you look at like the, re-asset allocation, the money coming out of bonds, holy mackerel, if you think about that bid underneath the market, I mean, there's a lot of demand out there. Are you biting on that theory as far as people out of bonds and where are they going to put their money at 2%?
Well, that underlies and supports this presidential cycle pattern. You have money coming out of money market funds. I think it was $70 billion in the last 2 or 3 weeks coming out of money market funds. So it's maybe the public sitting on cash deciding that with inflation at whatever it is, 7% a year, why sit on cash? So it's going to come into the market, but there are so many factors, and of course you're dealing with the machines every day who don't have a point of view and are probably flat at the end of the day. So supply and demand intraday is different from long-term demand. So I think it's going to be a choppy market until we find our footing for a decent rally. That one scenario says we go to a new high above 4,800 and then we come back down and make a better low in October, or maybe we don't make it there and it's a rolling bottom. But one way or another, I think you look to buy stocks on weakness that have demonstrated earning power. So Nvidia, there you go. So many of the stocks we've talked about. AMAT has earnings power, although I like Nvidia better. You could propose that as a way to play the semiconductor shortages and the building boom that's going to go on here. So there's a lot of ways to play this. The thing is, it's not going to be a straight up easy market. So you have to take that into account. If you're a trader, you've got a different set of problems than if you're an investor. If you're an investor and you have cash, you look to put it to work in that list of stocks that you draw up. You got to have a process, and the process starts with what do I like and where do I want to buy it? And you guys are as good as anybody every day defining those levels.
Marc, real fast before we let you hop here, there's a question. Someone wanted your thoughts on Airbnb. What does the power gauge say about that right now?
I don't know if we have a year's worth of data yet on Airbnb. Let's take a look.
I think we should.
I doubt that it's bullish. What's the symbol, please?
ABNB. Full disclosure, am long. Oh yeah, you're right. We don't have a. Yes, we do. Yes, we do.
Just. Yeah, we got data in December. As soon as there was a year's worth of data, the rating was bearish.
Great.
That was at a level of about 170. And we've exceeded that level. The rating's neutral now. The earnings are good, but again, let's take a look at valuations. Trading at 20 times revenue, no earnings to speak of. How do you buy it?
It's in this market, like in this market where it's all about now and not about future earnings.
Yeah, stories are not going to play. Earnings are going to play, and if people are with the staples, consumer staples got very overbought historically, and that's not a group that has a lot of upside double-digit earnings growth. So money is coming out of there, but boy, I wouldn't put it into Airbnb. Yeah, it's a reopening play and it's a momentum play, but it's not a fundamental play. So I'm a trader in Airbnb, not an investor. Whereas in Live Nation, I'm an investor because I know that that they make money and they've got a business model that works.
All right, Marc Chaikin is the founder of Chaikin Analytics and several well-known technical indicators. Marc, always a pleasure. Have a great rest of your week. We'll talk to you in a couple weeks.
You too. Stay safe, guy. We're going to have to stop saying that. COVID is over. Biden's going to declare COVID over in the State of the Union address. You watch.
Actually,
that's going to be the headline.
I will not take the other side of that bet, Marc. I will not take the other side of that. That's a pretty good take.
Marc, real quick, Russia. We talked to you about
I brought Marc back.
I'm sorry. I want to. You're a veteran of the markets. What's your take on the Russia-Ukraine situation here?
Boy, you're dealing with a very unpredictable guy who changes his mind all the time. Putin. I just read a story yesterday. Putin likes to make last-minute decisions. I'm Russian by blood, and I have no clue. And by the way, anybody who tells you they know what's going to happen, don't walk the other way because nobody knows.
Okay,
he could go off the deep end because he feels his old KGB chops, or he could back away and hope that he got some concessions out of the West, which is probably the most likely scenario because it's going to be a bloodbath, and it's going to be a bloodbath that's photographed on Facebook, on Twitter, real-time live. It's not good for his internal politics. And I'd say the one thing to know about Russia is the oligarchs rule. Even though they say Putin's the richest man in the world with all that money buried in Panama and Cyprus, the oligarchs can push him out, the billionaires, if they feel that their interests and their assets are threatened. So I don't think the oligarchs are going to let this go too far.
All right, we'll see. Thanks a lot, Marc.
Thanks, Marc.
Love it,
guys. Us old guys agree.
Hey, wait, real quick. Let's go back on the rundown here. Let's go back to Walmart because we skipped that one. To bring Marc on here. And Walmart, so we got a lot of numbers here, a lot of things to go over. First things first, EPS beat estimates $1.53 versus $1.50. Sales beat 152.9 versus $151.5 billion. So this company, God, they're drowning in money right now. They raised their dividend by a penny, 55 to 56 cents a share. They announced for the fiscal year they see about a $10 billion. I'm sorry, at least $10 billion worth of stock buybacks. We know they were facing some pretty tough year-over-year comparisons because everybody was buying everything a year ago, but the comps were okay, and the stock. I mean, last I checked, it was way higher. It's come off that now, it looks like, but it was. I mean, the initial reaction was good.
137 to me sticks out. I know it did get over 138, but right here, pair of highs at 137. You're not that far away. You take that out. You try and fill the gap at just above that. If not, the longer it takes you to get the 137 handle, hold, maybe give a little bit back. Street leaning the wrong way into the report. Look at all those down days going into the report.
Yeah,
So
low expectations here.
yeah, low
And
expectations here.
defensive stock too. It was
Yeah,
probably
I don't know.
yeah, it was probably just a good call to be long this into the report. Like the setup was there. I never really looked at it close enough, I guess.
All right, well,
But defensive.
this is a good indicator though for retail. I know we're gonna have Ryan Craver on the show next week, but I have a hunch that it's going to be a really strong earnings season for retailers. We just had strong January retail sales. I mean, that was for January. This is obviously for last quarter, but I feel like, I mean,
People are getting out and spending.
Walmart's numbers were good. Yeah, people are spending money. Maybe this is a sign of things to come. We'll find out more next week when the rest of the retailers all report here. But let's move over to Fastly. This is one of your disaster stocks.
Yeah, it's real bad.
Here. They reported earnings last night. And again, like it was kind of the same way with Shopify and Nvidia. I mean, these numbers were not that bad. The difference is the growth rate is slowing compared to the last couple of years, and they're not growing like hand over fist every single quarter anymore. So it's a question of just resetting expectations. But by and large, they like. It's not like they came in below estimates. They didn't. They came in above estimates, but the growth rate is all anyone sees here. It's just slowing.
It's a $20 stock. Back in October of 2020, this is $136. So, I mean, you're 20 minus, I'm just trying to figure out the percentage on that.
A lot.
You're down from the highs 85%.
Yeah.
85%. I always said when a stock falls 90% from the highs, they rarely ever come back. There was a stat I've quoted it before on the show, and I don't know where I read it. I can never find it again, but it was something like when a stock falls 90% from the highs, 90% of the time 10 years later, they're still off 90% from the highs. So that means like 9 out of 10 don't come back. I don't know, but you're getting dangerously close to that 90%. I like this company. I think the $20 is huge support. I almost want to buy this company at $20, but you know, it's hard, like, because when stock's out of favor, they just don't come back. But I look at all the support you had back, you're getting back to 2019 pricing. I mean, on this thing. And we know that they are important because we saw that one day that Fastly went down and the internet was all buggered up.
Yep.
So, I mean, they are important here too. So part of me wants to buy this, and I think of that 90-90 rule, which, you know, maybe I jumped that out because I can never find it again. But I mean, it just was like, it was from the tech bubble, and it was like, holy cow, like 90% of stocks don't come back. You know, and it's like, you know, everybody wants to talk about Amazon back in the tech bubble, and yeah, you just had to buy and you would have made money.
Well,
9 out of 10 were pets.com.
Yeah, but the one was Amazon.
The one was Amazon, but I don't know. Like, even if you bought them all, you probably still lost.
I don't know.
You probably did, because the one went up, you know, thousands of percents, but the others all went to zero on you. So I don't know. It's a difficult market to come in and say this is the low. I think that's got a huge level at 20. I think it could bounce off 20. But in this market, they kick you when you're down, man.
Yeah, we're coming off that low a little bit. 1953 was your pre-market low. You're a buck above it. So I think if you fall back to that area, I think you will find some bids. If you're looking for a little bit of a runner here on the upside, I think if you get over 2108, that kind of the over 21, you become buyers on strength instead of weakness here. But looks like there's just some slow accumulation here. If you get smoked buying it at the 1950-20 area, your next monthly low comes in at 1718. But in my bones, I don't feel it going down there today, but I got some pretty old bones. So we'll see what happens. See if it looks like you got some buyers at 20.
I'd love to buy this company. I can't. The 20, it's like, man, you've given it all back. You're back to a great level of support. Part of me wants to come in and buy this thing at 20 today and just go against all of my rules. But it just
why not?
Why not? You only lose $20.
Yeah,
it's now a leap. I saw that day, man, when Fastly went down. It's like, this is an important company, but the
Remember that
valuations,
day? Yeah.
it just goes to show you gotta long-term, you gotta look at valuation. And everybody learned it the hard way. And a year and a half ago, we were saying it. Valuation didn't matter. We were in a storied stock market. Nobody gave a crap about valuation, but it all of a sudden all matters. So in the long run, and I've always said that, in the long run, 5 to 10 years down the road, it's the only thing that matters. And you're looking at a company, and where's the market cap? Man, this thing is what, $3 billion now only?
Mm-hmm.
Would anybody want to scoop it up?
I don't know.
I
didn't want to scoop it up because I saw what happened to the internet the day it went down. I was like, I think it's a pretty important company. So I don't know. I got any more research on it. What the PE is non-existent because it doesn't make money, right, Spencer? We can't look at it on the valuation level.
They don't make money.
Have they ever made money? Probably not.
Let me check right now. Actually, I can do that easily in the Pro by going to the earnings calendar. Have they ever made money? No. Yes, that's a lie. They have for a brief moment in 2020. So, yeah. All right.
The problem is buyouts. People saying buyouts, but the biggest thing with a buyout is companies actually do look at valuation more than we do when you're buying something out. That's why all these nosebleed stocks, and that's why I said with Peloton, I don't think anybody's coming to rescue Peloton. Everybody hated me when I said I would be selling it at 35, went to 24, and then they all tell me how stupid I am. 500 people on Twitter, that when it went to 40, and I don't know what the hell I'm talking about. It's back to 31. Has it been bought out yet? Who's coming? I think Peloton's going to single digits eventually. Sorry.
All right, let's keep moving here. We got a lot more to discuss on the earnings front. It's not all bad. Let's look at the top gainer of the morning, and the number one stock on my movers tool is DoorDash right now, up 21% off of their report last night. If we want to flash back to Uber's report from a couple weeks ago, Uber said that their delivery business, which is Uber Eats, was up 70. Their revenue was up 78% year over year. That should have been a hint that DoorDash revenue was also up, which it was. Their earnings did miss. Though whenever there's a discrepancy between the revenue and the earnings, my instinct is to look more at the revenue because the earnings can often have some weird adjustments in there. But the sales beat there. Let me see here. They have orders were up 35% year over year. And yeah, that's what I got. The stock, like I said, is up 21% this morning.
Great report. Expectations in the gutter. They sell something like Fastly off 20%. They want to buy something up 20%, and vice versa. Stock goes up 20%. They got to find another one to sell. It's like every single night. We've been saying this for earnings season for a long time. There's big winners and big losers. Good report. Nice response. It's leaking a bit. Upstart leaked yesterday, and then it came back and got it back. If the market turns, this will turn. So market effects are impacting it here now. We are rolling over on the market big time.
I know what you do.
So you look at it and you say DoorDash is being impacted right now. This leak is due to the market. It was a good report. If the market turns, DoorDash will turn with it. But I'm not going long term. Just saying as a trade, it could pull it. I think about Upstart. I think about the path.
I just was going to say that.
I was also thinking that. I'm glad you
man,
I feel it's going to follow the Upstart path, but the market's got to hold up for it. So market is very important here.
Yeah, I mean, two totally unrelated stocks, unrelated sectors, right? But just kind of once again going to the market sentiment. Yeah, you're gonna catch a bid here at 115 because you are 15 points off the pre-market high, right? What's going on, man? Did Russia go in or something? What's going on? We're taking.
I was shocked that we were holding up as well as we were, and I was saying it was a good thing. I was like, we're only down at one point in time. We're only down 10 handles on the same news that with the opposite. When we rallied 50. Well, I guess they're listening to it now and they're going the other way. So
I don't
hold this 115 for you, Dash for Trash traders. You hold 115, pick your intermediate levels off there on the dailies. What your pre-market high was above 130. I'd maybe go 126.41 as a target if it just keeps going with the market sentiment. And then I just wanted to, was it Upstart? Yeah, it was Upstart. What it did, it's incredible yesterday. Look at the 60-minute here. This is the initial reaction, right? And it went and it just tagged 150. And then it came all the way back down to 130. At the end of the day, when they got it back up there, or they got back there around noon, where did it stop? 150 again, 150.10. Of course, you're trading higher in the pre-market because of the upgrade. But man, that pre-market level, I mean, it held. We were talking about it when it was in the pre-market way down at 130. It was trying to catch a bid. So see if Dash can catch a bid here, 115, 116. If not, I wouldn't want to be long it. I mean, there's a long way to go to the top of yesterday's range.
Palantir reported earnings. Give us the
Oh,
numbers here.
yeah.
Everybody wants to talk about this. I've had multiple people tweet
I
at
know,
me. The
I
chat
know.
is buzzing about it.
Chat's-
People love this stock,
I know.
and I don't know why.
I know. Okay, I'll give you the numbers. I mean, their EPS, they made 2 cents per share last quarter versus a 4-cent estimate. Their sales came in higher as well, $432 versus $417 million. They gave sales guidance for the current quarter also above the estimate, 443 versus 439 million. I mean, the numbers are fine, but I still don't know what this company does.
No, I know nobody does, and all I know is it goes down. People love this thing at 40, at 35, at 30, at 25, at 15. They love it at 12. At a certain point in time, you got to stop loving it. I mean, it's got a big level. I'll give you the 12. That's
yeah.
all the
Well, that's
support. It's a
huge. Yeah.
huge level. It's going to test it, looks like today. Does it
It
bounce
already
off the
did.
first
Well, it
time?
did. Yeah,
I
it did.
tend to think, okay, so it already bounced off. I tend to think it may hold it, but you're buying dogs of dogs. You're buying a stock that everyone absolutely sells. Even though they say they love it in social media, the tape is telling me there's just too many sellers for the social media love to even handle. So, I just think we got to start getting away. People have got to start getting away from these social media darlings from the last 2 years. And they can't do it because you know why? There's so many people sitting on them still. Cut those losers, man. This is what trading is about. This is how you have longevity in this industry. It's not about what you make. It's about what you lose. You've got to cut those losers. And if you're watching Palantir and it's at $30 in your portfolio and you're sitting with a 12, you're not managing your risk well enough. You've got to manage your risk. It's going to continue to give you issues. It's what it is all about. That's the only thing that matters in this trading world is discipline. Cutting the losers when when they start working against you. It's a reason I go flat in my portfolio every single day at 10 a.m. 10 a.m. I go flat, not my long-term portfolio, but my day trading portfolio, flat every single day, no matter what. Even if I had a stock taken over on me, opened up 50% on me. And we know what I did the next day? I ate the loss. I don't wait for it to come back down. Didn't wait for hope. I'm eating the losses. People are sitting on all this crap. They need to cut the crap. You need to get out. It was fun when they were going up, but if you're sitting on these things saying, well, eventually it'll come back, I'm telling you, in a lot of cases, they're not going to come back.
I mean, you can say that about so many stocks. It's not just Palantir.
No, there's a million. It's a poster child one. I mean, ARKK, take her whole damn portfolio.
I just going to say,
every day. TXG, the Kathy stock of the day. TXG, the Kathy stock of the day, down 22%. She's got like huge holdings in it. TXG.
Yeah.
So she's a huge shareholder in this. She's picked them all. She banked on valuations continuing to expand when they were already ridiculous. She banked on deflation. She could not be on the more wrong side of the trade. Every single day, she's in companies that are getting killed. And, ARKK has held up actually fairly well here, but it's hung out almost too long here and the 70 to 75. And it makes you think if you breaches 70, if ARKK, as long as it's above 70, you can try for a trade, but it starts breaching 70, probably going to test those lows at 64 again. I mean, it's
good. It's good to have a few lotto picks, but if your entire portfolio is lottery picks, it's going to end badly for you. It's going to end badly.
That's 100% accurate. I mean, you've got to have. I like Marc's approach. I take the same approach. You can have a few like high flyer lottery picks in there. You want to throw some Fastly in your long-term portfolio, for a flyer. Sure. You want to throw some of these, Palantir for a long-term flyer? Sure. Maybe it's the one that's going to turn around. But if you're all these Palantirs and Fastlies, if you're in all these stocks are all down 70, 80%, you're too concentrated on growth. And it's come to roost for you. Unfortunately, this has come now,
Yeah.
and a lot of these companies, unfortunately, are probably not coming back.
I was looking at TripAdvisor last night, and we talked about this yesterday because Booking and Expedia have been in such strong uptrends, and I thought, okay, so I know that Trip and I know Trivago have been the laggards of the group, but it's the same, more or less the same business. I mean,
but it's like laggards.
How bad could it be? Well, it turns out it could be a whole lot worse than I thought, because their numbers were terrible last night.
Why? Like, what? How are they doing it so wrong?
That's what I want to know as well.
Like that, like here's the stock. You have all these, Trip, and of them all at all-time highs. Close to Booking is up at an all-time high, hit an all-time high yesterday. Expedia all-time highs. And you got this stock is trading $26, and the all-time high is 65. Man, we said it yesterday. It's the laggard of the group, and I mean, you buying the dogs of the group for catch-up trades. Often you just get left with fleas.
Ooh, that's a new one.
It's a new one.
Same thing. I looked at this. I looked at this yesterday, and you look at it, and it's like, well, will it catch up? But like on the other hand, those are all the people that bought it off the 24 and a half level, and then they dumped it at 30 ahead of the report. There is you stuck under 26. If you feel like you need a level to look at, the pre-market low comes in at 25.60 actually. But I'd be looking at a zone 26.20. So if you split that, 26 potential support in this one. But like you said, I mean, if like just going the opposite direction, they just people must not go there. Do you go there? Do you go to TripAdvisor? Dennis, do you go there, Spencer?
No.
Wow,
yeah, I mean, I go there, like, I end up there from Google, and when you look up, like, things to do in Detroit, Michigan, and you just go on TripAdvisor but no, I don't
actually. I don't do any of that. Those travel stuff. Lisa does all that, so I'll ask her what she goes.
I don't travel anywhere anymore because we've been COVID forever. I have to figure out how to do it again. Hopefully, we're getting past COVID. Marc says COVID's over, and that's good news. I want to go on a vacation. I haven't been on a vacation in 2 years. Maybe that's why I'm grumpy.
Wait a minute! Didn't you just go somewhere?
That was hardly a vacation.
Where did I? Well, I went camping.
Yeah, that's what I'm talking about. I mean, doesn't it?
It was the only thing you could do at COVID times. Yeah, I went camping for a week and go back.
All right.
But I didn't feel like a tropical vacation where I'm sitting back, kicking up my legs, in Jamaica and enjoying, some.
I've heard things about those Jamaican pilots, but we're not. That's a story.
No, let's not go there.
For another day. Okay, let's do some ticker. Let's do some ticker. That was an old.
Hey, I made it back, and I'm never going back.
We don't tell those stories anymore.
Drop your questions for us into the chat. Drop your tickets for us in the chat. We will try to cover a few of them as we head towards the 9 o'clock hour here right now. Let's look at.
We could have a whole episode.
I am wearing the red striped shirt right now. I just realized. Somebody just said you're wearing a red striped shirt. I forgot. I got the Jamaica shirt on right now. Red striped beer. It's good beer. Like
hooray beer. All right, let's go with, if you put a ticker in the chat earlier, put it in there again, because I may have missed it. We can look at Roku because they report earnings tonight. So yeah, sure, let's start with Roku.
Okay, here's the issue that I'm gonna have with Roku is, one, valuation's not cheap. Two, this is a stay-at-home stock. It's clearly a stay-at-home play. Netflix, Roku. Netflix got hammered. Is Roku going to do the same thing? Maybe the expectations are low enough that they can get over that bar. Maybe it's possible. But I'd be scared being long into the report, because if they say anything not good, then you don't have anything like, oh, it's a reopening play to lean on. Not a reopening stock. It's the opposite of what's happening. If we're getting past COVID, you're not sitting at home watching, your Roku. You're going out and doing things. So I'm very nervous on this. I think it's going to have a big move one way or another. I don't know what the straddle is, but maybe I'd be nervous into the report. Maybe I'm going to be wrong, but I'd be nervous into the report.
Roku, $24. Is that right?
Yeah, probably
that's
right.
Big. Wow, that's
because everybody's nervous into the report like me. I'm paying up for insurance.
20. We'll call it $29. Oh no, that's next week. It's at 24. We'll go with 24.
$24 expected. I didn't look it up. I was too late, so I'll just go with it. $24 expected move. Sounds right. I think it's going to move $30.
When was it reported that Comcast was buying them?
Joel,
what?
Joel, come
Yeah.
on. That was
I
like
never heard that.
was 2 years ago.
Yes. Yeah. Right.
Never happening.
Joel, that was 2
It
years
was
ago.
here.
Never happening.
Yeah, it was. It was in here, wasn't it? Or was it in July last year?
I don't.
Yeah.
It was a 1-day rumor. I mean,
No, it ran. It ran. I think it was. I think it was off this, or was it during the summertime? Because they were doing something. When was the Olympics? Did we have a Summer Olympics? When was that?
yeah, we just had them last summer.
Yeah. Then it was here. It was like, oh yeah, because they were like co-streaming something with like NBC. There was like rumors, and that was it. That was the time. I don't know. 140. I'll go wide on this one. If that's what the straddle is, I'm a buyer at 140, seller at 180. In between, you're just throwing darts. Couple lows that we're actually taking out the support at 150, 157, 158.
All right. Here's a new one. I
A
see,
new one.
I see you,
I like
Samant.
new ones.
Encore Wire, ticker's Wire, WIRE. It's a
Good
electrical equipment company, $2 billion market cap, and they had earnings overnight here, which is why it's down this morning. Wow, actually, their earnings was a big old beat. Holy moly, they came in so far above those numbers. It must be a weird.
So was this yesterday that I reported? Because the move was yesterday.
Oh, I'm sorry. Yes, it was Tuesday after hours. I'm sorry. It was Tuesday after
Okay, yeah.
hours.
So it was move, and they hammered it.
Yeah.
I don't know. $100, big number. I don't follow the company at all. I can't say anything more than that. It's an ugly candle. Everybody's caught. Probably not bouncing back. Sorry.
Up just fractionally. You just have this low to the low from yesterday to lean on, 105.38, and then 105.12 from yesterday. That holds. Yeah, you get a little bit of a bounce. If not, you got to perhaps get a look at 100.84. But after a beat down like that yesterday, and it's only up 68 cents on 4,907 shares, it doesn't look like there's.
You get ugly candles like this, everybody's
They're
caught.
hard.
Seem
They're
to
hard.
not bounce back. Here, everybody keeps trading like it's 2020, and it's not. It's like the weak get weaker, and the strong still get stronger. We've always had that type of market, but when you see straight down selling like that all day yesterday, every day trader that doesn't want to take a loss is caught. Everybody's trying to buy the dip is caught. Usually the market punishes the maximum amount of participants. So it'll punish the long people who are caught for the last months, and it'll punish everybody who's caught yesterday. I think it tests 100 here eventually, and I think it eventually takes it out.
And then
92.15.
92.15.
Kick them while they're down. Or kick it while it's down.
92.15.
No mercy. We do not train.
Double
We're
single.
not trained to be merciful here. Mercy is for the weak.
What movie is that from?
That's Karate Kid.
Dennis, you ever heard of Global Online? It's a Canadian company, e-commerce. Ticker is GLBE. They had earnings.
I saw it popping off on my filters there last night.
Another Canadian
but
tech
I don't follow
company.
it at all. No,
Yeah, well, it's an e-commerce play. So again, not the environment for that right now.
No, it's popping. It's nice pop. Must be news or earnings or something. I don't follow the company. No comment.
I thought maybe it's because it's Canadian and you're Canadian and maybe you'd heard of it, but I guess not.
I saw it going. I've heard of it because I saw it going to my filters last night.
Okay.
But no, other than that, no,
Right.
I don't know anything about it.
Fine. All right.
Sorry.
Let's just do one real quick. Let's just do like Salesforce. We didn't talk about Salesforce.
Talk about
Ron
Salesforce.
John's asking for it. How is Salesforce doing this morning?
Taking out the low of the move.
Yeah, trying to anyways.
Yeah.
Not quite there. 209, 204 is the low of the move.
204.63. Yep.
Trend is not your friend. Cloud stock valuations have all been hit. $200 though. It's a darling. Is this one that eventually comes back? The market comes back. This could be one that comes back. I've been in it before. $200, maybe we're bouncing there. We got to start looking at more things to sell on the rips than buy on the dips. We're doing it backwards.
Yeah, I mean these month. I mean, when you see these monthly charts like this, like Shopify, you start to get into these areas where there's no monthly support. I mean, this thing could be at 150 and still, it'd still be way off the March 20 lows. I mean, what do you got between 150 and 200? But for right now, the low of the move is still valid at 0463, a potential support point. So keep an eye on that. SPOO's bouncing off 45.31. So we'll keep an eye on that. Maybe we got our pre-mark. Maybe we got a little low we can lean on here. Yesterday's low down at 22.75, and We'll see. I mean, it would be a good thing is if we could do what we did yesterday and just kind of mosey our way back up and then see what happens on Friday. But I'm going to let you guys take it the rest of the way here and go cover a lot more symbols than we did today.
All right. Have a good one, Joel. I'm going to bring on Peter Tuchman right now, the Einstein of Wall Street, live from his car on the FDR Expressway, I'm guessing. Let's find out if I'm right. Peter, good morning.
What's up there? How are you, buddy? West Side Highway.
West Side Highway. I'm sorry. I was close enough to me. Doesn't matter.
Yeah,
All right.
Peter,
Peter, what's on your mind here this morning? I mean, we've been talking about how the market is sort of just waiting for the next headline to come from the Fed or to come from the U.S. or Russia situation, and how not much else seems to really matter right now. Are you coming at that from the same perspective?
100%. And,
Yeah.
we've often talked about it. Sorry if I'm driving, but I got to get to work. It's kind of a crazy day. I often don't think that geo-global stuff affects the market in a way, except if it's really the only thing on the horizon. The market's dying for that little tickle to tell it what direction to go, because I think everyone's just trying to position themselves, and they're not sure what is going to be the catalyst to the next move. Is it going to be the Fed? Is it going to be whatever it may be, whether it's going to be earnings, retail, whether it's going to be employment? And so what we're seeing for the last couple of days is clearly I can't tell if we're playing Russia, Russia's playing us, whether Putin's shorting the market and moving his troops up. I feel like we're in a game of Risk. You remember Risk as a kid, right?
Yeah.
Where there's that great Seinfeld episode. If everyone wants to Google it, we were watching it on the floor yesterday, where Kramer and Newman are playing Risk on the subway, and they're talking about the Ukraine. And then there's a guy standing next to them and Kramer says to him, the Ukraine is weak. And the guy just kicks the board up. I can't help but just notice that we're
Uh-oh.
that's where the size, we're seeing action. We saw I love to analyze the market and see what the market does with information, right? We know that things don't react the way they used to. So when we got hit with that 50 or one basis point shock and all the other day, the market reacted negatively. So now we know that the market's going to, take a little bit of a powder when that reality starts to bear. And now that for some reason, which has a lot to do with energy, with global conflict, whatever the heck it is, that we are engaging the interaction between us and Russia. Yesterday, when those two planes, when the news hit the tape at 29, the U.S. and Russian planes were sort of playing over the Mediterranean, market got hit pretty hard on it. It didn't react. These algorithmic.
All right, Peter, you're breaking up a little bit here. You're breaking up a little bit here. So I want to jump in. What is your approach? What is your advice to traders right now? Is it just sit on your hands and wait?
100%. You look, the market's movements. Can you hear me?
Yeah, I got you.
Okay. The market's movements are so fast and furious, and they're not predictable in any way. The fact is that when we're engaging Russia, there's a big fast sell-off, and then it bounces right back. So how long are these sell-offs going to be? How long are the rallies going to be? Where do the buyers live? Where are the sellers? I think you sit on your hands until the trade's set up technically. There's no way to predict what the market's going to do. I'm kind of baffled, that we're engaging in such a big way, but it's what's on the horizon right now. So it's where we get hyper focused. Market's dying for directionality, right? You're seeing big moves. Look at Shopify. I mean, look at some of these names. When they don't like something, they really don't like it. When they're scared about a Russian conflict, they really don't like it. When they disengage it 20 minutes later, they'll rally the market all the way back. It's nutty.
All right, Peter, I'm going to let you hop because I know you got to get to work here. So thank you so much for joining us today from the car. And we'll talk to you again next week. Have a good one.
No matter where I am, even if I'm parachuting, I'll come on Benzinga, guys. Good luck.
All right, I certainly hope not, but I guess it was only one way to find out. Tune in next week when Peter parachutes onto this show. Okay, we got to hop here because we got to go to live trading with Benzinga. I will be on live trading today. Mitch is going to be out for the next 2 days. He's going to the ETH Denver conference. So if you're there, go find him, hit him up. But I'll be live with Ryan and Zunaid coming up next right here, youtube.com/Benzinga. I just dropped a link in the chat. If you guys missed it, Mitch was talking about his gold trade. He made a gold swing trade the other day. I put the link to watch that video in the chat. I'll do it again right now, just so you all can check that out if you would like. I recommend it. It was a pretty good this strategy breakdown video. So check that out. Thanks to all of our viewers and all of our subscribers on YouTube. A, are just our channel subscribers, but B, our YouTube members. That's right. You can become a YouTube member, get access to custom emojis, and eventually other perks and benefits as we add more content and more layers on top of it. Just click that join button where it says we'll join on the top of our YouTube page. Check out Benzinga Pro. I pinned a link to the top of the chat. That link will give you 25% off Benzinga Pro. There's also a link to do that in the description of this video. Highly, highly recommend that. News, research, squawk, scanners, calendars, the whole 9 yards. Check it out, pro.benzinga.com, 25% off the link that's pinned to the top of our chat right now. All right, I'm going to hop. We have 419 likes today. Let's get to 450 in the next 30 seconds. That'd be pretty sweet. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Thanks to our guests, Peter and Marc Chaikin. Once again, thanks to all of you. And I will catch you guys over on our very next show, Live Trading with Benzinga, coming up live in a couple minutes. See you guys over there.